Is it realistic to say we wrote them a letter and said, this is what you should do to reduce our trade deficit by $100 billion, please get it done?
I think it's important to listen to what the Secretary is actually saying, David. I think what he's saying to us is this is a first step, not a final step. The tariffs are one tool that we have, but we're continuing to explore other tools in the toolbox, like negotiations. And at some point, I think there might even be talks of some multilateral nations kind of joining in with the U.S., or maybe even more talks of is the WTO a viable option in this arena? So,
Maggie, that sounds really good, first step. At the same time, the president said that within the next few days, Bob Lighthizer, the trade representative, would be coming out with a list of the specific products that they'd impose tariffs on. Do they have that much time? Are they going to slow that part down?
Well, I think if history is to be a lesson here, what we've seen with this administration, just as we saw with the steel and aluminum tariffs, is that these are usually negotiating positions, and that where we stand today may not be where we stand 3 days from now, and they tend to negotiate, to a more reasonable position or more towards the center as time goes on. So I think we're cautiously optimistic that that will apply here too with the Chinese tariffs.
Yana, come in here, because wherever the U.S. administration is concerned, and whether it's trade policy or what we see coming from the White House itself, it just adds to another layer of uncertainty for investors as they adjust to a higher volatility regime. How do you characterize what we're seeing in terms of price action, investor sentiment in the markets right now?
Well, there's no shortage of news flow that we're following, and I think when you think about the marketplace, it really is a function of two key inputs. We talk about the multiple, which is taking a beating due to all this monetary and fiscal data points that we're watching, and then the other part is the earnings growth story, which is the fundamental side that we're eyeing as well. When we started the year, the VIX was at barely 11. Now we're over 24, 23. So 10-year, 20-year averages would tell us we should be around 20, so the volatility levels were subdued. We're watching the sentiment that's coming out from the Washington, but also globally. And what we're also watching is earnings growth that continues to be steady and continues to be very strong.